Okay, what is up, traders? What's up, tycoons? Super excited for today's video, coming at you with another installment in the free trading course playlist that I'm putting together for 2023. Very valuable resource. Going to take you guys from A to Z and really break down the beginning things that you want to start off with when you're learning trading. And then by the end of it, we're going to go over multiple strategies and start combining strategies together so that way you can increase your efficiency on the road to becoming a successful trader. Trading is like going to battle. It's like going to war. You need to have the proper weapons and you need to know how to use those weapons so that way you can increase your odds of success on the battlefield. And the VWAP is going to be the subject of today's video. It is the volume weighted average price, a measure used in technical analysis of a security's average price over a trading period. Now, this is going to help you guys out a lot. All you need to do is smash the like button, subscribe to the channel if you guys are new, and we're going to jump straight into it. Now, let's move on. So, the volume weighted average price is a measurement that shows the average price of a security adjusted for its volume. It's calculated during a specific trading session by taking the total dollar value of trading in the security and dividing it by the volume of trades. The formula for calculating VWAP is cumulative typical price times volume divided by cumulative volume. Now, why is it important? Well, the VWAP gives traders a smoothed out indication of a security's price adjusted for volume over time. It is used by institutional traders to ensure that their trades do not move the price of the security they are trying to buy or sell too extremely. For example, a hedge fund might refrain from submitting a buy order for a price above the security's VWAP in order to avoid artificially inflating the price of that security. Likewise, it may avoid submitting orders too far below the VWAP so that the price is not dragged down by its sale. Now, how is it used? It's used in different ways by traders. Traders may use VWAP as a trend confirmation tool and build trading rules around it. For instance, they might consider stocks with prices below VWAP as undervalued and those with prices above it overvalued. If prices below VWAP move above it, traders may go long the stock. If prices above VWAP move below it, they may sell their positions or initiate short positions. Institutional buyers, including mutual funds, use VWAP to help move into or out of stocks with as small of a market impact as possible. Therefore, when they can, institutions will try to buy below the VWAP or sell above it. This way, their actions push the price back toward the average instead of away from it. Now, they talk a lot about stocks here, but you can use the VWAP for trading stocks, for trading commodities, crypto, forex, bonds, whatever it is. Okay, so it's not just limited to stocks. Now, a tip, okay, is VWAP's incorporation of volume is valuable to traders for what it can indicate about the degree of trading activity during short periods of time, whether the competition is taking or exiting positions. And essentially, what that is they're just talking about the time frames. Okay, so there's different time frames you can look at: 1 hour, 15 minute, 5 minute, 1 minute, daily chart, things like that. But some of the key takeaways of the VWAP, okay, is that it appears as a single line on intraday charts. So that's what we've got right here. And a lot of people have their VWAP as purple. We've got our VWAP here in purple, just for the sake of this video. Okay, it looks similar to a moving average line, but it's smoother. The VWAP represents a view of price action throughout a single day's trading session. Retail and professional traders may use the VWAP to help them determine intraday price trends, and the VWAP is typically most useful to short-term traders. Now, that's something that I definitely agree with. It's definitely more for short-term trading, right? Whether that's scalping, quick 5 minute trades or less, whether it's for intraday trades, an hour to 2 hours, or even long day trades, and sometimes a swing trade. So for instance, this is the daily chart up here, all right? And there's a big X here. This is not what you want to be using the VWAP on, okay? As you can see, it's not too helpful, all right? Most of the candles are closing below and opening above, whether it's in a bearish trend or in a bullish trend. So the VWAP is not very useful on those higher time frames, okay? Especially like a daily chart, a weekly chart, things like that. I would recommend staying away from that. Now, the 1 minute chart we can see is much, much more useful. All right, we're trading above, all right, and so if we're above VWAP, then generally we're in a bullish trend, and you can see we're continuing to go up, and we actually bounce off of the VWAP here for some support. So candles closing above the VWAP indicate that you're going to be in an uptrend, right? And so that's what we're looking for here. And we can see that we're continuing this uptrend trading above our VWAP. But candles closing below the VWAP equals a downtrend. And that's what we're seeing right here as well. A nice downtrend and candles just, closing below the VWAP, indicating a downwards trend. Now, there's multiple different ways to use it. Okay, one of the ways is going to be as support. So, for instance, here we have a break and a retest. So we break through our VWAP. You can see over here it's some resistance, not able to break out above it. We come back down, we break, and then we get a retest. So that's one of the most efficient ways, is to look for a break and a retest rather than just the initial break. Let's say you see a break on this candle and you go long here, and very shortly afterwards you see we come back down and we're below your entry, and you may possibly get stopped out. So just in my opinion, it's more efficient to wait for a break and a retest, and your risk to reward ratio is going to be skewed a lot better in your favor. If you're entering here around VWAP, you can put a stop loss shortly below it. Okay, and then have your profit target, at previous highs or wherever, your profit target is for your trade. You can also use it for resistance, okay? And again, looking for a break and a retest. So here's the initial break, and we start our downward trend, okay? And remember, below VWAP is a bearish trend. And then we come over here and we retest our VWAP. So we get the break, the retest, and look at what happens here, okay? So in this one, we barely get up above our VWAP, right? And you'll see this typically a lot of times, right? It's not going to be an exact perfect level all of the times as it was over here, where as soon as we touch it, we end up finding support. A lot of times you'll see some candles closing, just above or just below the VWAP, but it gives you a good indication of if people were able to break, right? If we could have gotten a break and a retest and then continue upwards, we might have been able to take a long position there. But we knew beforehand that we're in a bearish cycle, we're in a downtrend, and we're heading lower. Okay, and we got a break and we weren't able to hold above VWAP. So this shows that buyers were not able to come in and really take over in the market and, have the bulls push price higher. This is showing weakness in bulls and rather strength in sellers. And then you can enter on the next candlestick after we break and, do the retest. Okay. Now, what we have here is going to be combining some of the strategies that we've gone over in our trading course so far and putting them all together to make some efficient trades. So the first thing we have on our list here is going to be supply and demand zones. So we have our supply zone up here. This is an area where there's an imbalance of sell orders pushing price lower each time that we come into this zone. Now, the second thing we have on here is going to be candlestick patterns. And right here, we get a shooting star. Okay, so that's what this candlestick pattern is right over here. We get a shooting star pattern. This is a bearish candlestick pattern. So number one on our chart, we're entering into a area of supply, a supply imbalance. And we know that typically these are where you want to be looking for possible short entry. Number two, we get a bearish candlestick pattern. Okay, we get our shooting star. Number three, we have volume. Okay, so volume, if you take a look down here, you want to see volume head upwards to indicate, a strong movement. So what we have is we get two of our signals combining together for a possible short entry. And now we want to see if volume supports our thesis and if volume is behind us. So if you're moving down and you're looking to take a short position, you want to see volume trending upwards. Just like if you're taking a long position, okay, you want to see volume moving upwards. Volume increasing and going upwards is going to help your position, whether it's long or short. And you want volume to be increasing as the direction of whatever you're trading is going the direction you're looking for. So that's number three. We have volume behind us. And then number four here is going to be our VWAP. Okay, so we can see that we had two of our initial things happen here. Then we start trading below the VWAP, right? And we notice how it's resistance now. And it's acting as resistance. We get a fail break up here where bulls could have tried to take control, but rather bears failed, or bulls failed, and bears took over, right? And we continue to push the price lower. And then we have volume on our side. So four things combined together for a total of a very excellent trade with an entry right around here. And you take that short into your previous demand zone. which is in an imbalance of buy orders where typically you'll find some support and the price may get pushed back up as it did over here as well as over here when it retested that demand zone. So hopefully you enjoyed today's video. Nice and short and sweet. The VWAP is very useful and it is one of my favorite indicators. I think it's definitely one of the most useful, especially for day traders and really people just learning do some back testing. Okay, practice some stuff out, paper trade for a little bit and really get a feel for how you like to use the VWAP. And once you do that, then hopefully you can start combining some of these other strategies as well that went over in the video. Now, if you're brand new to the channel, I definitely recommend watching my supply and demand video, my candlestick pattern video, my volume video. I'm going to go ahead and put the free trading course playlist up right now. So make sure to click on that. If you enjoyed this video, I'm pretty sure you're going to enjoy some of the other videos in there as well.